Welcome to the OHMS Property Podcast, your go-to guide for navigating the world of property investing. I'm your host, and in every episode, I sit down with property investors, developers, and top industry experts to share their insights, strategies, and inspiring stories. Whether you're a seasoned investor or just getting started, join us as we explore all aspects of building wealth through property. Welcome back to another episode of the OHMS Property Podcast. In this episode, I'm here with Mitch Nunn, who's a HMO property developer based in Essex. You're really going to enjoy this episode, so stay tuned for all the tips and tricks that we're going to be talking through. Welcome. How you doing, mate? You okay?
Yeah, good. Thanks for having me.
I appreciate you coming in.
Thank you.
Trip to London for you. So
yeah. Not too far.
Not too far, absolutely. Now, I'm really looking forward to this. I thought it would be a great conversation because we've both got some things that are a little bit similar in what we do. Both like HMOs, that's the first thing. And I first started following you on Instagram a while back and sort of interacted with some of the stuff because I found it to be pretty good content that you're putting out there. And then first met you in person at the HMO property workshop that we run last year where you did a talk. And yeah. I must say you brought in a bit of a crowd with you, which was fantastic.
It's good to hear.
Yeah. And a lot of great feedback from kind of how real you were, just showing everything that you do day to day as a property developer.
Yeah.
So I thought, let's get in a podcast studio, just have a real conversation for an hour about what you're up to, and let the viewers kind of see it, the insides and all the bits and pieces that you're doing in the background. So
yeah, perfect.
So yeah, if I can just start by handing over to you, if you could just sort of tell us a bit about yourself would be great.
Yeah, so I suppose people that don't know me already, my name's Mitch Nunn. I'm based down in Southend in Essex, down in the southeast. And I would say I'm probably known for probably high-end sui generis HMOs. That's sort of our focus, it's our business model. And a lot of our content that we put out there is based around HMOs. That's probably what I'm best known for.
Absolutely, yeah. So if you're not following already, I'll put all the details in the description below. So should we get stuck into HMO conversations then and see how you're getting on? And like maybe if we could start off with talking about the latest project that perhaps you're working on, if you could just talk us through a little bit about that.
Yeah, absolutely. So again, if you was to look at my social media now, you would see that I call them our bread and butter.
Yeah.
So that down in where we live, down in sort of Southend, Westcliff area in Essex, it's like a 1900s large Victorian style property, which obviously we're in a non-Article 4 area there, so we can convert to a 6-bed HMO under PD and then obviously go full planning application, sui generis for the additional bedrooms. And really that is our model down there, as I would call it, our bread and butter. Yeah. We have started to scale up in terms of we're doing more commercial to residential. We've got a planning decision, I think, this week, which I'm really excited for. So obviously we can talk about that deal. Yeah, but great. Yeah, so again, just focus on HMOs. You know, we just want to fold in as many bedrooms into the portfolio as possible. Yeah. And we should achieve 100 units at some point this year. So
that's amazing. Wow. Sorry to interrupt, but I just wanted to introduce a sponsor of the channel. Trinity Finance is a directly authorised FCA regulated mortgage brokerage. Founded in 2015 with over 30 mortgage brokers, we're really well placed to help you with all your property finance needs. Starting with first-time buyers and those moving home, we also help people remortgaging residential and buy-to-let property. Alongside that, we specialise in ground-up development, commercial lending, HMO funding, mezzanine, auction, and also your traditional buy-to-let. If that's of interest, get in contact with us via email at info@trinityfinance.co.uk, or you can give us a ring on 01322 907 000, and we look forward to hearing from you. Mitch, I'm quite jealous because Southend, not because of your handsome good looks, but Southend,
as well, but.
And your height compared to me, but Southend, is it Westgate? Southend, they're kind of near each other, aren't they?
You've got Southend, Westcliff, basically, right down on the beach.
So those areas, compared to the areas that I've been trying to operate in, they seem to have these Victorian houses with the L-shaped outrigger that seem to be double the size or that's wrong actually, but maybe 30-40% bigger than a lot of the stock in other areas. And you've obviously mentioned the fact that you're operating in these areas which are currently still non-Article 4, so that's amazing. But when you look at some of the areas that other people are trying to invest in, the stock itself sometimes is not really convertible into a HMO without doing huge adaptations, extensions, loft conversions, all which in the current market are very costly. So do you mind just explaining maybe a little bit about why you chose Southend or how that has come to fruition? Did you do research into that particular area? How's it?
I suppose this is probably a good thing to touch on, because obviously when you've got people that are looking to do HMOs in certain areas, what things to look for. I mean, obviously Southend's on my doorstep. I live in a little village called sort of Hockley, which is like 20 minutes away. So it's basically on the doorstep. So obviously we've got an in-house build team. So obviously can manage those, and they're local. So, makes it easy in terms of the management for the build, but also then after, once it's in the portfolio. Again, it's the right style of house. These are not 1900 Victorian style houses where, they're all four bed with, 2 reception rooms, lounge, diner, large sort of, as you say, outrigger kitchens. And they're really easy to sort of convert. I would say they're the right price point as well. So we're buying houses roughly, I'm saying all of this and someone's going to be going, I'm going Southend, creating competition. But just obviously, so the right price was we generally buy a 4-bed semi. I mean, we actually exchanged on one last week, which we're buying for 350,000. We did actually agree that 9 months ago, and it took that long to get it exchanged. So they have creeped up a little bit more, about 375, which is what we've agreed recently. But those houses generally make 7 beds on the existing footprint without any extension, and that is that's what we now call our sweet spot. So we have previously done loft conversions, etc., to create 8 and possibly 9, but we just think for speed, cost, and we're just we're sticking to the 7 beds on existing footprint now, and that's
so perfect location in terms of what properties, the existing footprint of these buildings. Price point's good because the more you ramp that up, the more the stamp duty and the frictional costs of financing and everything just become compounding, getting more and more. In-house build team, talk to me about that. So I'm actually privileged enough that I've actually been down and seen some of your properties. We actually recorded a YouTube video on that, which maybe I'll put a link to on the screen. But is it your brother-in-law? Who's absolutely on it, isn't he? He's just like managing the team and doing multiple sites for you at the same time. And so that's obviously part of the success, is being able to control the build costs. Do you think you would do it if you hadn't controlled the build cost? Like, so say you weren't running the in-house construction thing, do you think it'd still be as good as what it is now?
I mean, I would say that we're probably converting these HMOs probably cheaper than anyone else with the way that we have it set up. So obviously pay the guys day rate. That team is about 6 people, which, they pretty much cover everything, bar a few of the packages, obviously, as you'd expect, like electrics, plumbing, plastering and that sort of thing. And we generally, if we're not extending the property, we're converting generally to about 20 grand a bedroom. It has been less, depending on the standard of the house. So we're generally working to about 20 grand a bedroom. So
is that including all your finishing furniture and stuff like that?
Not furniture. No. That is literally product finish. Obviously, then it's furniture on top of that, which generally you would do anywhere between 5 and 10 grand, depending on the fit out. So going back to your question, would it be as, I think I do know other people that have gone out to market and got prices with a main contractor for that work, and it has come out more expensive.
So this is a similar thing that me and you have both got, and I know because there's pain points in property, isn't there? There's how do you find the deal, and some people, they really struggle to find great value property. And if you can't buy a property at the right price in the first place, if you're way overpaying, you kind of think, well, it's probably half going to go wrong from there anyway. So putting that to the side and saying, right, you can find a great deal. Others that perhaps are not as or more time poor than me and you are may find that running their own construction business, essentially, is kind of what we're doing. I know yours is outsourced to someone who's kind of heading that up for you, but you are still in control of buying materials, paying staff, all these things. Some people might say, well, I haven't got what it takes to do that. I haven't got the knowledge to do that. And I'm just going to go to a main contractor and I'm going to get them to give me a fixed price.
Yeah.
I found over the years that has been one of the biggest risks for me in property. I've always found that, and I'm not saying for 1 minute that there aren't some amazing contractors out there, okay? Some main contractors, a builder who will come in, especially if you've signed a JCT contract and you're protected, and they come in and they deliver what they said they're going to deliver from start to finish. But because construction is an unregulated industry and there's no such thing as the ombudsman that you can go to and say, this person's done this, you tend to hear more horror stories than you do success stories in construction. So for me, one of the biggest risks was handing my keys to my precious property that I've just purchased and paid all this money for to someone and then not being able to let go of the control of, has it been done properly? Because when you're not selling a property and you're holding it, you need to make sure that it's spec'd properly, that it's, you know, that the toilets are going to work, that the sinks are going to work, and that you're not going to just have these problems constantly after. And that's maybe just one example of it. So we both do a very similar thing there where we control that element. Maybe we're both a bit over controlling with that, actually. I'm trying to think, is that a good thing or not? But I do the same as you there. So it's quite an interesting thing that we're doing that.
I agree. I think, you know, I've experienced before with a main contractor that, you know, there's lots of, as you get into the build, I know there's a contract in place, but lots of sort of variations start to come out. And I think with these high-end HMOs, certainly when you go over 6 bedrooms, there's all these different requirements in terms of fireboarding, sound testing, and I guess there's a lot of unforeseens that you can crop up, and then that's when the variations in the work start to start to really rack up, and then I suppose that's where you could come a little bit unstuck.
Recently, I'm just trying to think of what things that might explain this slightly better for the viewers, but having a main build team, I'm quite similar to you. I've got 5 or 6 people that are just on CIS full time, and then I'm lucky, I've got my dad who works in the construction business. But taking on a few more HMO conversion projects in a location which is slightly off where we would normally operate. And so I've tried to not use a main contractor to deliver the product that I want, but I'm also conscious of having a price that's back that I know is wrong because it doesn't take into consideration drop ceilings, double acoustic board, the sealant, you know, you name it. It just all these things. A kitchen which is not suited to the kitchen that I need for a HMO. So more recently, I've gone and done like, I'll give a loft conversion to a loft conversion company and say, just do the shell. And I'll just price up a shell.
Packaged it up.
And I'm like, right, how much is the shell? 30 grand, 35 grand, whatever it is, depending on the size. Right, you crack on with that. And then I'll go to a ground worker and say, right, how much to do rear extension, drainage, and get my brickwork up. And I'll pay them. And I'll break it down into stages, but I'm still kind of outsourcing some of the stuff that's not as much of a headache for me. And that's still, because of the controlling nature of me, it still lets me be able to come in and then do the bit that I want to control, if that makes sense. So
absolutely. I mean, obviously, I know, we've got an in-house build team, but the packages we sub out, and sometimes, you know, the guys can do it, but a lot of the time it comes down to speed as well. So we obviously, plumbing and electrics, you're always going to sub them out. Plastering, just for speed. The decorating, and then obviously the tiling. So Luke and the guys can tile, but just they're a lot quicker just to bring a team in. So you've got the way up between cost, time, etc. But everything else we do in-house.
Yeah, it's really good. And then so for you, the exit has always been to refinance these properties. Have you sold any of them yet?
No.
That's
why the surveyors hate, because there's no comparable
evidence.
I
was going to just say this. I mean, how do we value these HMOs?
There's no comparable evidence. One hasn't sold, because why would you? They're such good assets that if you're going to go through the heartache of, you know, and the stress to build one of these things, you know, you're going to retain it in a portfolio. So there's no point selling them.
Absolutely. So for people that are new to property, or perhaps they're not new, but they're sort of trying to build their education, one of the reasons I wanted to do a podcast, and some of the reasons I put some stuff out on YouTube really, is just to try and give some like free content to people where they haven't got to pay thousands of pounds for this education that perhaps won't deliver what they want it to deliver, and just feel kind of disappointed at the end. and they can watch stuff and think, that gives me a bit of an idea about what I'm doing. Now, I know for you do some like site tours. I've seen some stuff like that, which I've always thought is amazing for people that actually want to come down and look at these things.
Yeah.
Have you got any of those planned or lined up that people could come to?
Yeah, so yes, we have got one coming up. I think it's going to be April the 10th.
Okay.
I think, which is a Thursday. So
yeah.
I think that's the next one. So we're just finishing our latest project, so we'll have a completed. So what we'll do is we'll go around 3 HMOs that we've got, one that we've just acquired, one that's partly ripped out, and then one that's finished.
Perfect.
And there's a slight different twist on this, which I haven't done before, but those who want to, I'm also going to have like a lunch with some form of education.
Oh, okay, yeah,
after that. So it's quite a new format. But
really
I think we've done about 3 or 4 previously.
Yeah.
We get really good turnout, 50 or 60 people.
Amazing.
And I suppose off the back of those, having such a good response, that's where we've sort of set up the HMO Academy, which is, as I guess you'd say, it's like work in progress, but we're looking to get that out this year. If
you could get me the link for the tour, I'll put that in the description of this video, and then if anyone wants to book along, it's relatively cheap to come down and have a look, isn't it? So that's good. So could you talk to me a bit more about the Academy then? So sorry, before we touch on that, right, education, because we've talked about this a little bit, but you can go on YouTube and you can type in HMO conversions and you can watch people until you're blue in the face about how to do a HMO conversion, right? Yeah. But I find there's not that much detail on the intricacies of how to buy, how to fund, how to convert, what you need to do. You know, if you wrote down a to-do list on every HMO conversion and just even thought about the amount of things that you need to tick off just to get a license, it can be sort of like analysis paralysis on the amount of things that you need to tick off. Yeah. So there's only so much you can learn online. There's only so many books that you can read. Now, spending 20 grand on a really expensive course that perhaps is being sold by someone who's not doing it day to day and walking the walk, in my view, is a complete waste of your money. And I'm not saying there's not some good education, there probably is, but some of it is low quality for very high cost. So could you, on that note, I'm letting you talk about the HMO Academy because I know, having known you for a while, that it's not going to be that. It's going to be this product which lets people get into HMO conversions and the nuts and bolts of how to do them. Could you talk to me a bit about what does it entail for someone that joins?
The HMO Academy is something I set up. I was hoping to release a product which is going to be like an online course and various support through online weekly webinars, site visits and that sort of thing. But again, because first and foremost, I'm a developer myself and I'm busy, I'm working on it in the background, but it's been slow to release. But hopefully in the coming months, we'll have something. But as you said, you can go and watch YouTube videos or read a book or even, go on one of these other courses and the information on those will be good, but they'll only take you so far. So the idea with the HMO Academy is that people can be within a community of like-minded investors, all doing high-end HMOs and sort of helping each other. But you've also got that sort of like hand-holding within the community because I think that's important because, everyone needs that. Just to check in, have I got that right? Have I got my numbers right on sort of NGDVs or, even going through the build process? There's so much that will come up as they do with these HMOs that, just to check in with someone, have I got this right? What would you do here? So the idea is to build a community, provide education for people to, go out and build at these HMOs.
Yeah, it's really interesting because I think first of all, there's some like accountability that people will get by being part of a community, but they'll also just be able to lean on people and people that you vouch for and trust, and that's really powerful for certainly the people that are starting off and want to do HMOs.
I think obviously, and again, as I said, because we are HMO developers, there'll be opportunity to come down and see live sites. I mean, we've got 2 to 3 live sites at any one time. So, to come down on a monthly basis to actually see the sites, ask the questions. I mean, that's real hands-on experience, which I don't think anybody else offers that.
Yeah, no, I agree. That's really good. Right, let me ask you a few questions then, because we've spoke a bit about education, but I do think there's got to be a starting point for people to want to transition into this sort of stuff. So, so why HMO? like out of everything that could be done, I know we've spoken about you're doing some other things as well.
Yeah.
But let's put aside the fact that buy to let is tricky.
Yeah.
Right, because of the landscape and the constant legislation that keeps changing. But let's put that bit aside. There's lots of other things that you could do.
Mm-hmm.
So like running a business. I'm not sure if you run businesses before, ground up development, commercial to resi, Airbnb, all the different strategies. Yeah.
Yeah.
But why would you say HMO is the thing that you're focusing on?
I would say, I think I actually brought this up in the workshop that we did.
Okay.
That I think HMOs, for me, I like to live a very balanced life. And I think for me, that HMOs provide the sweet spot, I would call it, between sort of the effort versus return. So if you look at it on a spectrum, you're probably one end of the spectrum, you've got a single let, buy it, rent it out, you might never hear from that property again. But obviously, again, your yield's going to be pretty low. Other end of the spectrum, you could run an SA property. You're basically running a hotel, loads of management, loads of time and effort. So that wouldn't suit me. Your yield might be slightly better. So I see sort of HMO in the middle in terms of the effort versus return. There is other reasons in terms of, build equity through high-end HMOs, commercial valuations, and try and recoup some of your original capital, so you can obviously keep going and build the portfolio. And then obviously they just cash flow really well as well.
Yeah, really interesting. It's glad to hear that you thought that through, because I sort of sometimes when I speak to property investors, I think, do they just make decisions? And because sometimes we just sort of like think, that makes money, I'll do it. That makes money, I'll do it. And I don't know whether sometimes people have actually clearly thought for a strategy, but it's obviously very clear that this is exactly what you want to do, and that you're making that your clear focus. So in terms of tenant profile, are you working professional, or are you doing some housing association or some like work contractors? How is that working for your tenants?
Yeah, so we have always been working professional, but I mean, you've been to see our site, so we work within quite a close proximity. Yeah. So we're still doing high-end working professional, but also we're doing a sort of lower spec, still really, really nice. I mean, you've seen our houses, more of a lower spec, and then going out to sort of, as you say, housing association, just to get a slightly different tenant profile. Yeah. We are also looking at potentially student as well. A few acquisitions that we've got going through at the moment are currently C2 properties.
Oh, right. Okay.
So
what's that, hotel, is it? Or
C2 is a care home.
Care home. Oh, right. So
But again, because of the houses, they're that 1900s, they wouldn't meet current regs. So it would be sort of like a HMO with a sort of care element to it. So we've got a couple of those that are going through. So we may look to take them through planning to get them changed to sui generis high-end, sort of the larger HMOs. But I think our fallback position is actually to do a high-end care home.
I see.
So housing for people with,
and then lease to a care provider.
A care provider. Again, it's not something I've done before, so there's a few considerations within that. What security have I got by the housing provider? Refinancing these, which is actually a question to you. So, have you financed any C2 properties? Do they look at that differently to a HMO? Yeah,
they do. Yeah. So. Yeah, you're definitely going to be looking at a commercial-based lender. And obviously it's all going to come down to the lease to the provider. So you're going to need to make sure that you're picking a good,
some of a track record.
Exactly. And that's one of the key things, but we can chat about that and see if we can help you. We've done some at Trinity already. So, so for diversification then, so, because this was my key thing, like whenever someone's taking any form of investment, whether it's HMO or just general property investment, we're always sort of, if you're in property, a lot of the time all your eggs are in one basket, aren't they? They're like, I don't know that many property investors that are with mixed stocks and shares portfolio, bit of crypto, bit of property, and perhaps some do diversify a little bit. But for the majority of people that I know, it's property or nothing. Even to the detriment that some of them don't have pensions, they'll just say property is my pension. Does it sound familiar? I don't know.
The wife asked me the other day, have you got a pension? I went, no, don't need one of those.
Property is my pension,
but I have actually just buying a SIP.
Oh yeah, fine. So
to run alongside the
probably to buy property in your pension. Is that right? Or
I am actually buying stocks in that.
Okay,
so
So the diversification wise, you're either diversifying through your asset class, so you might do commercial, resi, HMO, different types of assets in property, or you're doing it by your use class or your tenant profile. So how much split have you got, like working professional versus the other part? Is it mainly geared still to working professional, and is the demand there for the working professional?
There's definitely demand there still for the working. But again, it is something that we're aware of. The lettings market has been relatively slow over the last few months. I don't think that's just HMOs. I just think that's lettings in general. I think it's been quite slow, but I think we're currently about 94 to 96% occupancy rate.
Oh, right. Okay.
Across just, I mean, obviously all the single lets are rented out, there's no issues there, but across the HMO rooms. So, I would say we're probably looking to fold in like 40 bedrooms a year. That's a lot of bedrooms, especially if you're working in a close proximity. So again, just diversification through probably the tenant profile. And again, we will start to branch out, maybe start working towards, Basildon, Rayleigh, a few other towns.
You need to, of course, spare room need to give you a bit of a discount if you're putting that many bedrooms on there, aren't they? So I was talking to a friend who's a property developer in Kent, but he's also quite big into HMOs. Probably not got as many as you, but he's got a good number of them, half a dozen, I'd say. And he said to me something that was quite interesting. I hadn't really thought about it this way, but he said, Omar, I started doing these really high-end HMOs, like breaking ceilings on rental, like this is in Kent, he's getting sort of £1,100 for a room, right? And he was like, and it's brilliant. I've got them, the slatted walls, control your heating, everything's like amazing in them. And he said to me, and do you know, after the first year, because I filled all the rooms, no problem, but after the first year, trying to get them re-let again at 1,100, 1,000 started to prove a bit difficult. Because he said, I'm looking back online and there's some new HMOs that have sort of come to the market and they're now 950s per month. And he said, in hindsight, what he kind of wished that he did was launch them at 950, not push the market rent 10, 15% than kind of the best that's out there, and to let his tenants stay a bit more longer term. Because what he found was it was like the real keen ones that took all his rooms, but then they only wanted it for a year, and then they've kind of, a lot of them have moved on. And now he's re-letting them and they haven't got that exact same feel as they were first time around. He sort of felt, well, if I'd have let them at 950 each, I might have had 2-3 year tenancies. So I thought that was a really interesting point, actually. It made me look at some of mine a little bit differently. I mean, obviously I've seen yours. Yours are great as well. Obviously really not as good as yours, mate.
I would say they are equally as good. High end. So we find that. I mean, obviously when you've got a brand new product, which is fresh out of the box, no one's lived there, it does fetch a premium, but obviously over the coming
You've got to be realistic,
months and years, obviously, once they've been moved into, you start to tweak the figures, £50 a month here and there.
So are you managing with an estate agent, or are you self-managing, and what's your tenant turnover like? Like how often do people stay and go?
So at the moment we are working closely with a local letting agent, but we think that potentially we're dropping the ball in certain areas at the moment. So I have more recently thought about taking someone on, not taking the whole function of lettings in-house, because I wouldn't want a big team. I've had property management businesses before, and they are a headache. But if we could manage the front end in terms of the adverts, the leads, I guess the marketing for the rooms, and obviously the Spaces brand, and then from the point of acquiring a tenant goes over to the letting agent for the referencing and that sort of thing, and they can manage the ASTs, the rent, and all the back end functions. So we are looking at doing that, again, because we are going to have roughly about 100 rooms based on our average room rent of just over £800 a month across all of those rooms. That's £1 million rent roll. So when you think, if you had £1 million turnover business, technically, and no one working within it, that would be strange. So we are looking at taking some in-house PA, admin, sort of portfolio managers, just to really keep on top of it and make it the best it can be. Especially as we start to scale up over the next few years.
Maybe you might be able to get a bit of a discount from your current lettings agent if you're taking away some of the stuff that they're doing as well.
I've got a meeting tomorrow to discuss that. Yeah,
you never know.
Yeah, so I guess it will be like sort of like a hybrid role, because again, we're going to have a lot of rooms, a lot of responsibility, and if you've got 100 rooms and you've got a 90% occupancy rate, that 10 rooms, that's costing you $8,000 a month. That's $100,000 a year you're potentially losing in gross rent. So it does make sense to have someone
on a decent salary that can make sure that 100K.
You can get back data, because it's a little bit like, obviously we generate leads from lots of different channels, whether it's all your marketing, social medias, is it Rightmove, is it Spare Room, we put certain banners up, and getting that sort of feedback as well, we can then tailor our marketing to sort of maximise our occupancy. Which will then,
that's really interesting, actually. Right, let me ask you a couple of property related questions then. So are you, what would you say is your favourite bit about being a property developer? Is there anything in particular that you think is this is the sweet spot of what you're doing? Not the fact you're doing HMOs, but because I always used to think that, being younger, I used to think being a property developer, I'd have loads of money in the bank, drive
we're always skint.
drive a really nice car and go on holidays all the time. And for some reason, my life just hasn't.
I mean, it can be that. Obviously, I've just come back from Dubai. But I would say, obviously, I've had businesses in the past which we've sort of scaled and sold. And, at that point, I think we had 20 to 25 staff. Had 2 businesses which we sold. And I feel like...
What were they? Do you mind me asking? The business?
So one was a company called Securo, which was like a construction site security company. So we sold that in the middle of COVID, actually, like 2021, had to work, a year handover to 22. So I've been out of that for 3 years. And another one was a property management business, which was called Urban Life, which we then sold on to a trade buyer, Warwick Estates. So... I've had businesses, but what I like about property is that, again, as I said, go back to the 100 rooms. Technically, you could have £1 million turnover. No staff, and you work on your own. Obviously, there'll be a lot of admin involved in that. But again, going back to it, just like the balanced lifestyle, I think you've got to get to a point. I think also the strategy that you sort of dive into will be dependent. If you're doing, SA turning over 100 million, you're basically... running a hotel. So I think just the balance it sort of gives in terms of the lifestyle, which is a big factor for me.
And then so the next question to follow on from that is, what's the worst bit?
Do you know what?
Or what's your biggest pain point?
I think I'm a control freak. So anything that's outside of your control. Again, when I look at that whole cycle of acquiring the property, obviously we promote our profile. We've got good connections and a good network, so get offered a lot of off-market staff. We can control what we pay for it. We've got the in-house build team, so we can control what we spend on it. Obviously, we roughly know what our GDV is going to be. So I would say across that whole cycle, we're pretty much, I would say, we've got it wrapped up. There's just certain stuff like, planning, it's out of your control, planning committees. And
talk to me about that then. So, because obviously that seems to be, for a lot of developers, a pain point. What would you say? What would you say? What's the problems with it, if you like?
I mean, planning for HMOs where we are, we've got everyone through, but it's just that the process in doing so. So obviously we go C3 to C4, which is obviously outside of Article 4 permitted development, and then obviously we have to do a full plan application for the additional bedrooms. But in our local area, there's a councillor that just hates HMO. So anything that comes to HMO is like, right, pull that into committee. You have to go in, committee meeting.
Really?
I'm in committee pretty much every month.
But you've got a really good success.
Because
a lot of people go to committee and they get refused at planning stage. So how are you managing to get everything through?
Well, I mean, if you actually look at the application, so the house is already a 6-bed HMO, and again, our sweet spot is seven beds. So actually you're in committee to talk about one additional bedroom. So it does seem a little bit pointless, but I get it's there for a reason. But actually our last committee, which was last week, we actually had a unanimous decision. So like 15 yes and none again. Again, obviously they get it up on the whiteboard. They can see the standard that we're going to. So, hopefully they can see that we're trying to do good for the community. So, yes, I think it's just the time. Obviously, getting pulled into committee then extends. They obviously have to request an extension of time, so that you lose another month there. And obviously, all the time you're waiting for a refinance. And you need the funds to go on to the next deal.
Slows you down.
Maybe planning. And obviously we've probably come up against a few hurdles with building control as well. More recently, they seem to be getting hot on these larger HMOs. So that's been a pinch point, I'd say.
Yeah.
But
what are the sort of hurdles that you're facing with building control that you hadn't faced before, if you like?
Yeah, I think it come down to we were working with a certain building control and had a certain contact, so surveyor, and then he sort of moves, change of team, and it was still the same company. But I think where the issue arises is there's lots of guidance for HMOs up to 6 bedrooms, and then there's lots of guidance for blocks of flats. And when you're doing a 7, 8, 9, 10 bedroom HMO, you're in this grey area. And depending on the person who's coming out to survey the property and who's going to put their name against it ultimately, they will be on the spectrum of do they lean more towards it's a single dwelling house, or are they leaning more towards it's a flat? So one person come out and say, oh yeah, you don't need fire lobbies, we're quite happy with that. But then the other person can come out and say, actually no, I want fire lobbies, metre by metre with a fire door going into each bedroom, so you've got a concealed staircase. We want sprinkler heads, we want AOVs. How far do you go with it? Because they are deeming that as a block of flats. So obviously that creates issues, I would say. That's probably been, but now again, going back to it, what is a sweet spot? If you are doing, I think I messaged you as well saying, we're doing 7 beds now on over 2 floors with no extension. Yeah. Again, when you're over 2 floors,
it's reduced compliance, isn't it?
It's reduced compliance. And also they seem to cut you a bit of slack. I think as soon as you go over 3 floors, which again, I can see it from their side, I'm not pushing back fully because, if there's a fire in bedroom 1, 2 or the kitchen and someone's up on the top floor and you've got to get down 2 flights of stairs again, further to travel. So I can see why it's there. But again, because it's an unknown, you just want to know where you are. So tell me what to do and I'll do it. But you always get that pushback. Oh, well, you might need a fire strategy report. You need to consider this. And obviously you need to consult the fire brigade. And no one really wants to commit to it. And obviously when you're in these builds, you need to know what you're doing. Yeah, so it creates a lot of confusion. So I'd say that's, and I know that's lots of people in other different areas are also experiencing the same thing. So I would say that's probably the biggest hurdle. And now when I say to people, if you are going to do a HMO, it's your first one, just do a 6 bed on the existing footprint, a lot less regulation and requirement. It'll just be a lot more straightforward.
I think that's really good advice, to be honest with you. I mean, you'll be surprised. Some people, they hear HMO and they think like, let me get stuck in and do my first one. And, it sounds silly, but some people just don't even research to know what is an Article 4 area and what's not. Yeah. And they jump straight in, buy themselves a property, then realise, actually, I've got to go to planning. They don't know if that area is saturated with HMOs or not, and they'll go to planning, and then they'll find out that planning don't want any more HMOs, and it's kind of end a property journey before it's begun. Yeah. So that can be really good, valuable advice if people can start looking at Article 4 areas first, and then going from there, and then understanding compliance. Yeah, we've got like a couple of HMOs that we're doing at the moment that are over 4 floors. And the compliance is, like you said, it can be really challenging. So for new investors that haven't done conversions, you kind of need to work your way up before you take on such a big challenge, I would say. And people can do it, but it's just making that to-do list so much bigger. And for yourself, like when you do something over and over again, it just becomes familiar. You just don't really think about it. It becomes easy. And it's when you just have that one thing that's changed, and it's like, right, now you need an AOV, you need a sprinkler system, you need a fire lobby. It's like, well, we haven't planned for that.
Yeah. I mean, that is ultimately what happened. We done one, the same as we did the last 4 or 5 or whatever, and we got to the end of it, right, sign off, we're done, come out, oh no, I'm not happy with that. And I'm like, right, and I think going back to it, so now my advice would be, get a really good team around you as well. Yeah. Because, when you're doing these larger HMOs, like the pre-plan check, so between the architect and building control, is so important. Yeah. You want to iron out all of the issues because, for example, if you've done, I don't know, a couple of bedrooms and then building control say, oh, I want a metre by metre fire lobby. If you've got to put that on to get sign off, but then that fire lobby makes your bedroom fall below minimum space requirements,
it's actually unviable, isn't it? It's completely,
it just, another thing is as well, they're starting to ask for insulation of external walls. So I know people that have had floor plans drawn up, the bedroom meets 8.5 square meters, but then you have to start doing wall insulation. It's reducing the size of the bedrooms, and it's full on at the moment. So I never used to see the appeal of a 6-bed HMO, because I used to always think, well, those additional bedrooms when you're going 7 and 8, they exponentially make your numbers much, much better. But now, all things considered, I think with a 6-bed HMO, in terms of, obviously outside of non-Article 4, there's no planning risk because you're going C3, C4 under permitted development, and also the reduced requirement in terms of building control. I think it's a good place to be.
No sound testing stuff there.
No sound testing.
Amazing.
Yeah, I think as well, the requirements like, you've got to have fire doors, got to have a door closer, grade D fire alarm. Yeah, but in terms of the actual, but again, I do believe as well that may be changing. And I think they may require now, because I have heard it more recently, so obviously the fireboarding, etc., drop ceilings for 6 beds, they want the 6 beds now done to the standard of a 7. So I think, again, that would make sense. I think.
You're keeping the tenants safe.
Yeah, I think it's just having the clarity around that, so what you're doing.
Yeah, definitely.
While you're doing
Mitch, I've got a couple more questions for you. So the first one is Article 4. We've spoken about that. We've mentioned it quite a lot. For those who don't know, just Google it, but it's essentially a restriction on an area to stop you using a permitted development, right? What do you think in terms of the area you're operating in? Do you think Article 4 would ever come there? And if so, does that benefit you, or would that be something that would hinder you in your business model?
I mean, I think there is discussion of it coming in my area. So I don't think it would completely change our business model, because, again, you can still do HMOs in an Article 4 area, but obviously you need planning prior. It would then become an issue with the acquiring of a property, because you'd have to do everything subject to. If it was your plan to do a HMO, because if you bought a house, when we buy a house, we know as an absolute minimum fallback position, we can be a C4 under PD. So we can go in, start doing the work straight away as a 6-bed, then go for the planning for the additional bedroom. If you can't have a 6-bed, you'd have to do subject to, because obviously you need to get planning approval before you actually start. So there would definitely be a change in the way we acquire properties. Whether the business model would change, I don't know. I am actually up for maybe going back to maybe acquiring a property and doing a couple of flats. But, when you're retaining these properties, when you look at the rent that generates off of 2 flats versus, a 7-bed HMO, it's like night and day. So we just want to stick to that at the moment. And hopefully we'll have enough around us before that does come in. Yeah,
to be honest with you, I mean, one of my first ever HMO conversions was in an Article 4 area. I think I showed this at the workshop, and it was a house I bought at auction, and I went straight in for 7-bedroom HMO, and it was approved first time round, sui generis, in an Article 4 area, but the area wasn't too saturated with HMOs, and it was designed really well in terms of bins, bicycle, and all the rest of the stuff, parking that they want. So I think if you're providing a really good product, and if you're getting this planning through at committee or appeal stage, there's an argument that you'll continue to be able to do them, but it just maybe needs to be a bit more strategic on location. And then finally, the only other thing to add to that is I used to really dismiss the pre-apps, thinking they're rubbish. But there may be more of a place for a pre-app if you do have Article 4 and you want to know, is this viable before I commit to it? You may spend a small amount of money, produce some drawings, and then actually get a bit of a rubber stamp before you commit.
I think a pre-app's only about 4 weeks as well in our area, rather than a full plan application. So again, you can do that without owning the property as well. So you can definitely do a pre-app. So I mean, more recently, the property that I've acquired is actually a commercial. So it's over 4 floors. We're going to retain the commercial on the ground floor, and then we're going to convert the upper part, so 3 floors to 12-bed HMO.
Wow.
So
can you imagine the compliance on that?
I'm not looking forward to that one, AOVs. But that's got like proper fire lobbies. It's almost like a mini block of flats, concealed staircase. But on those ones, I mean, well, so far, and I don't want to jinx this, need to touch wood somewhere, but it looks like that's going to get approved this week. So hopefully by
fingers
the time
crossed.
This is
fingers crossed. Let us know.
By the time this is released, hopefully it will it'll be in the bag. But again, because of what that is, because it's been commercial previously. It feels like there's less pushback because it's outside of a residential area.
Yeah.
And again, for some reason, that's not been pulled into committee as of yet. So, you know, that might be a way to go in the future as well.
But I've really enjoyed the conversation. I think there's been some really good tips that we've given there and spoken about for people that are new or maybe just trying to scale up some existing portfolios and things. Would love to get you back in like a year's time maybe and just catch up with you and see how you're getting on, see if any of this stuff, see if you maintain your 100% planning approval track record, and see if you've managed to grow the portfolio to the level you're trying to get it to. So like hats off to you. It's really inspiring what you're doing. And I'm sure so many people will look and think like, this is amazing. So if you don't mind, if we could finish up, like been doing this on a few of the podcasts we recorded already, is to give a recommendation for a book or another podcast or something that you think the viewers might find interesting, if possible.
Yeah, I would say, because it's the way I probably live my life, it's a book that's well known, but I would say probably The Compound Effect.
Okay, I've not read that one actually.
No, which I just think that it's the concept of just taking small action daily over a long period of time to achieve a desired goal or outcome.
Yeah.
And I think you can just apply that in many areas of your life, whether it's a relationship or fitness or work. You know, many people look at me now and go, oh yeah, it's right for you, you're where you are now. But, you know, it's all those daily actions over, you know, 12, 13 years of investing to get to this point and all the hurdles you've had to overcome. So just take daily action, be 1% better every day. Yeah,
100%. Couldn't agree more. That's amazing. Thank you so much. Hope you enjoy. Like and subscribe, and we'll see you at the next one.